Welcome to The Long View, created exclusively for First Merchant's private wealth clients and constituents. Today we'll be taking a look back at 2022 and offering an informed assessment of 2023. While rising inflation and interest rates, coupled with bond and stock market fluctuations, have made 2022 a volatile year, those sometimes unpredictable conditions have also proven the predictable effectiveness of the long-term strategies we craft for our clients. While those strategies help our clients weather the storm of a year like 2022, it's important to understand why. In short, our plans are rarely built with a 365-day period in mind. Rather, we think in terms of years, decades, lifetimes, and generations. When the long view is kept at the forefront, a challenging year becomes a bump in the road rather than a mountain. The success of this approach can be traced directly to our team of advisors. Savvy and experienced, they draw on the deep well of knowledge required to protect and grow our clients' assets. And while they frequently rely on time-tested approaches, their relational approach means clients never receive one-size-fits-all solutions. Rather, we deliver tailored strategies to each of our clients based on their unique financial and investment needs. In 2023, we'll continue to deliver those well-reasoned strategies, but we'll also continue to expand our services within our core offerings of private banking, financial and estate planning, investment management, fiduciary administration, and corporate retirement plan services. Business owners have been a core constituency for our advisors for decades. Now and in 2023, we will continue to enhance our specific services for business owners. Our efforts may be as simple as beginning the conversation about managing wealth and assets outside of your business, or it could be the initial phase of planning to sell your business while thinking about the next stages of life for you and your family. No matter where you are in the process, our advisors stand ready to guide you through and help you succeed. In 2023, we will also heighten our attention to professional services clients in fields like medicine, engineering, architecture, law, accounting, and finance. Part of this expansion will include targeted credit offerings designed to allow younger professionals to begin building their optimal personal balance sheet much earlier in their careers. And in 2023, we continue to focus on the next generation of our existing client relationships. In this audience, we frequently see a broad range of financial acumen and knowledge, but our advisors are prepared to meet clients wherever they are in their personal journey. Whether it's through an initial extension of credit to purchase a first home, or beginning to assemble a financial plan that accounts for varied sources of wealth in the future, our team of advisors will be focused on targeted generational advice inside the backdrop of intergenerational wealth transfer. Overarching this focus, in 2023, we will begin an evolution of our technology platform that will represent the largest investment we have ever made in our business, with the goal of creating a modern and dynamic client portal that will empower strong connectivity to your team of advisors and the clearest view possible of your financial picture and progress on your specific journey to a secure financial future. We're excited about the direction of our business and wanted to share with those joining us on the journey, our clients and stakeholders. Now I'd like to introduce you to Marcos Nogues, Chief Investment Officer, who will take a deeper dive into 2022 and the prospects for 2023.
Thanks, Michael. I'm Marcos Nogues, Chief Investment Officer at First Merchant's Private Wealth Advisors. I'd like to share a few thoughts about financial market conditions in 2022 and a brief outlook for 2023. 2022 was indeed a very challenging year for both stock and bond markets. There are many reasons for this volatility, but I'd like to focus on three factors we think were at the heart of the problem. The first is inflation, which was initially thought to be transitory, but climbed over 9% by June. This prompted the Fed and other central banks to tighten monetary conditions aggressively and created a headwind for financial markets. The second major factor was the spike in geopolitical risk. When Russia invaded Ukraine, this caused a supply shock in commodity markets and led to heightened tensions among global nuclear powers. The third factor driving volatility was the lingering effects of the COVID pandemic. China continued their strict zero-COVID policy, which disrupted global supply chains. And here in the US, the labor force never fully recovered following the pandemic, especially with workers over 54. As we look ahead to 2023, there are several key themes we're focused on. First, we think inflation peaked and will continue trending lower into next year, but probably won't decline all the way to the Fed's target of 2% by year end. Another theme we'll be paying close attention to is the housing market. As mortgage rates climbed over 7% this year, housing affordability was crushed. Home sales dropped and prices peaked. This should bode well for inflation, but it will negatively impact economic activity in the construction sector. Looking at economic growth more broadly, several indicators now point toward a mild recession next year. Whether we enter a recession or not is a matter of semantics. The bottom line is growth in 2023 will be low under the weight of tight monetary and fiscal policy. Having said that, we see some bright spots in financial markets. For starters, the Fed is in the final innings of the tightening cycle and will likely reach a peak Fed funds rate of around 4.75 to 5% sometime in the first half of 2023. The risk-reward for investors in the bond markets is now the best it has been in years. In the equity markets, valuations have corrected to the average level going all the way back to 1990 and removed much of the speculative excess created in recent years. The question for investors now is whether or not corporate earnings expectations have fully adjusted to the slower growth outlook. This is an environment where you want to pay close attention to the quality of the companies in your portfolio, and this suits our investment style to a T. As Michael mentioned, we prefer to take a long view rather than get lost in the short-term noise. I should note that despite recent price declines, the S&P 500 returned a healthy 13% annually over the past decade. As we see it, investors should stay the course and avoid getting distracted by recent price moves. I hope you enjoy reading our investment commentary in the long view. And as always, our advisor team is here to answer your questions.
Thanks, Marcos. And thank you, our clients and stakeholders. The value of your trust in First Merchants and our team of private wealth advisors is beyond measure. We wish you a happy, healthy, and prosperous 2023.